Hey, good afternoon, everyone. Marty Mazura, 13th of March. Here's our chart that we've been tracking now since all the way back in here when the S&P was approaching 2,600 after that huge, almost 20% correction that began back in September. And since then, we had a trajectory that was, of course, too steep to sustain, and we've had some consolidation in here. This resistance between 2,800 and 2,815 essentially confirms why the technicals are important, at least on a short-term basis, to pay attention to, because frankly, they often work in terms of defining levels of support and resistance and so on. We talked a lot here about the 200-day moving average and the importance of it from a long-term trend perspective. The fact that the market came down, tested it, and for now has successfully passed that test is very bullish as well. This big move on Monday, recapturing the 10-day moving average, was important as well. And then today, we actually came up and at one point on an intraday basis, eclipsed the high that was set intraday back in here, and then sold off of that again. So the fact that we're held above the 2,800 today is positive. The fact that we couldn't quite push through this level again would be not positive, obviously, by definition. We'll see what the rest of the week holds. Futures are up in the after hours. Right now, if it were tomorrow morning, futures are pointing to another test of this high level right here. So certainly in terms of the price action, this is very constructive. We get through this area with some momentum. And there's not a lot between here and the September all-time high. You could argue that about 2874 would be potentially a next level of resistance. So we get through here, we could see some real money come in and push us up to that level for another test before we get back to and above these all-time highs. Today, in terms of the data, globally, things really weren't bad. Eurozone industrial production in January exceeded expectations. Mortgage purchase apps here in the US exceeded expectations. Durable goods exceeded expectations. And one of the things that I look for in that number that's very important is capital goods. And that would denote business expansion. They exceeded expectations as well. PPI, Producer Price Index, like yesterday's Consumer Price Index, was tame, so there doesn't seem to be any huge inflation risk out there. And construction spending was up as well. So we had pretty much across the board better than expected economic data here in the US and in Europe as well. One thing that I pay attention to, which is actually part of our macro index, is the Citigroup Economic Surprise Indexes. And for the Eurozone, that has gotten markedly better. Other news out of Europe today was a vote to delay a no-deal Brexit. Now, I've made the case from the very beginning a couple of years ago that the odds that the United Kingdom would leave the European Union without some workable trade arrangement is low, because the economic hit of such a move would be huge. And make no mistake, friends, that would ripple through to the global economy, and that includes us here in the US. So the market has a right to be very nervous about that. And while Theresa May did get concessions she thought were meaningful this week, they were aggressively shot down in yesterday's vote. But nonetheless, the folks in Great Britain do not have the stomach for, again, a hard Brexit. Question being, will the EU actually allow for the delay? I suspect that they will. And ultimately, I think later in the year, they will all come to terms and will be in pretty decent shape as it relates to Brexit. Of course, anything can happen. We have been surprised over the last few years on a number of fronts, and this could be another surprise, and we'll deal with that surprise if and when it actually does occur. So I will tell you that the underlying technicals aren't quite as positive as a simple price action. We've explored here the importance of on-balance volume. I've showed you over the past year plus what a good signal it can be in terms of the character of the trading, whether stocks are being accumulated or distributed. Clearly, during this consolidation, while the price was holding up, the sellers definitely had more conviction than did the buyers. By the way, tomorrow we will see today show up as a nice spike higher, but clearly we have a bearish divergence here in the on-balance volume. A few more days like today, and then we'll have a new high, and then that particular negative signal would be taken care of. But right now, this signal by itself suggests that the bears will win this battle one more time. Of course, that remains to be seen. Again, today's volume would probably bring this bar right up to here. As you can see from this point to here, we had a bullish divergence. And right now, what this essentially does is put us in neutral territory. On the short term, it's bearish. On a longer term basis, it's neutral. It's somewhat ambiguous in terms of the signal that it gives. Another thing that's a little less optimistic is this particular chart, which actually tracks volume at price. So again, 2818 is where the market stalled out back in October. As we got, as I said earlier, above that level, what we didn't see was a move up in volume. As you can see, volume was petering out as we got to that higher level. That's not a really strong sign. Typically, if we were going to rush through this level, you'd see it hit there, go above it, and a breakout to the upside in a bullish scenario would be supported by higher volume, something that would look more like this, which was the action around between 28.15 and probably 28.17 on the S&P 500. So this really brings into question the strength of today's move. It was impressive in terms of the price action. Wasn't all that impressive in terms of the volume. I will say it again, though, in the after hours, we're seeing a nice uptick, and we're actually seeing that on pretty decent volume for after hours trading. So we may actually come right back tomorrow with some good volume and push above these levels. Of course, that remains to be seen. There's a fair amount of data that's going to be coming out overnight on the Asian economy, and we'll take a look at that and see if it has any market impact. Asian markets should rally pretty hard this evening in follow through from the US move, but again, the data could have something to say about the sustainability of that tonight. So folks, on balance, this looks optimistic. The moving averages, the 50-day coming up real close to the 200-day. When that crosses over that, technicians call that a golden cross. Sometimes that can mean pretty bullish things about price action going forward. One thing that was not in the headlines today was anything about US and China trade. If there's anything that poses a real hard ceiling around these levels or anywhere between here and these all-time highs, it's of course issues around the agreement between the US and China that they're supposedly hammering out over the next few days or weeks. We get a good solution there that essentially eliminates all the recently added tariffs. I think that can be very bullish for the market. It can be sustainably bullish as long as we don't go after Europe in the same vein immediately thereafter. And I talked a lot about that, and I'm sure we will as those developments emerge over the weeks to come. So folks, I can leave it there for now. Thank you as always for watching and listening. And of course, I'll be back again very soon. Take care. Bye-bye.